In this video, I'm going to go over the difference between CFD prop firms and futures prop firms and which ones I prefer and the pros and cons of each one. After being 750K funded with TOPSTEP and 400K funded with FTMO multiple times, I have a rough idea of to know which pros and cons of each firm has. So let's get into it. If we look at the futures firms, some of the first things you're going to notice right away is there's no spreads. The challenges are much cheaper. There's very little slippage, if at all. The platforms are a lot cleaner. You can trade directly on TradingView. So there's lots of pros for the futures firms relative to the CFD firms. There's also a lot more reliability I found in the futures firms. They're much bigger than the CFD firms. They're doing higher payouts. You're allowed to have more allocation for the accounts. It's just overall a better trading experience on futures firms compared to CFDs in most cases. Now, there are some cons as well. There is trailing drawdown on almost all plans. So if you are a new trader, trailing drawdown is definitely not ideal. It's significantly harder to catch payout on. Let's say if you make $3,000 on a 150K account and then you lose $2,000 the next day, your drawdown is now less than what it was when you first purchased the account. So overall, it's definitely harder on futures firms in terms of the drawdown. Also, the drawdown ratio is very low. There's only a 3% max trailing drawdown on most prop firms. It depends, they're not all the same, but most only have a 3%. So that also makes it very hard. And no mobile trading. Now, I shouldn't say there's no mobile trading at all because some of them still do have mobile trading, but it's just very poor compared to someone who's used to MT5 such as myself. So if you're coming from MT5 and MT4 and you're switching to futures, while yes, it can be a benefit that there is no mobile trading because it keeps you out of stupid trades, it could also be a big drawback if that's what you're usually used to. And another con is there's a high turn rate. Because the drawdown is so low with futures firms, it's just a lot easier to blow your account, and I find it's a higher turn rate on your account. Now, if we look at CFD firms, you can see some of the pros are there's more drawdown allowance. There is no trailing drawdown on most two-step plans. There are a couple firms with the trailing drawdown, but majority of them do not have it. So it's a lot easier to keep your account. It's much easier to, I wouldn't say pass because it's a two-step, but it's definitely a lot easier to keep your account and get a payout. And also most of the profit splits are 80-20 versus some of the futures firms, which are a little bit less. And then there is mobile trading, which a lot of people do prefer. I personally also like to take trades from my phone. So that's a big positive as well. Now, some of the cons are, yes, it's more expensive. That's definitely significantly more expensive than most futures firms. There is slippage and there is spread for sure. And they're definitely less reliable. After 2023, I'm sure all you are well aware, there was a big Armageddon in the prop space. Many prop firms went bust, many prop firms did not, and they did okay. But overall, there just tended to be a lot less reliability in the CFD prop space compared to the futures, which I do think will change in the future, so stay alert to that. Some other cons are there is less allocation allowed. So most CFD prop firms are going to allow you to have 300K or 400K, but very rare you're going to be allowed to have 750K or even up to 2-3 million like Apex. So there's definitely some pros and cons to look at for both. And let's look at the top CFD firms in my opinion, and then we'll also look at the top futures firms. So we're going to build a case for FTMO, which I personally think is, and I'm pretty sure most people will agree, is the best CFD firm that you could possibly go with. So it has a 5% daily drawdown, which is pretty good. I mean, relative to the futures or to the prop firms in general, 5% daily drawdown is pretty good. A 10% overall max drawdown, and the biggest key factor is going to be there's no trailing drawdown, which is huge. So if you have a 100K account and you make $5,000 one day and the next day you lose $4,899, you're not going to be overall in drawdown. Yes, you just lost your profits, which is annoying, but your account is still in profit. You're not trailing like on a futures firm where your account would be almost busted. So that's huge. Another thing is the mobile trading. So if you're someone who likes MT5 or MT4, you like to trade on the go, you like to have your trades and you be able to watch them on your phone, execute them, move your stop, put your stop break even, move your take profit, things like that. Of course, MT5 is definitely going to be the better bang for your buck. The next thing would be, it is more expensive, so you do need to throw that in there. It costs about 1,100 bucks for a 200K account. But like I said, it comes with the trade-off of not having trailing drawdown, having an 80-20 split, and then the payout period, which is 14 days. So you really got to weigh it your ins and outs. And then if we look at TopStep, we have a 3% overall drawdown and a 6% target. So yeah, it's a little bit easier relative to FTMO, but the trailing drawdown is huge because that's where everyone gets caught up. You make a little bit of money, you lose a little bit, and the account's basically blown, but you're still in profit from when you purchased the account. It's ridiculous. So it's a lot harder, I would say, for the trailing drawdown. Overall, I would say if you are a new trader, I would stick to CFD firms. It's just easier to pass. It's more importantly easier to keep the account, especially after a payout. And I think it's just more sustainable with those drawdown parameters than a futures firm. But if you are an advanced trader and you've been someone who's been trading for a long time, I think futures firms are definitely the way that you can continue to scale your capital once you've already done the CFD firms of your choice. And then the next thing would be for TopStep is it's 150K account is roughly $300. It's $149 for a 150K account at the beginning. And then if you pass, it's $149 for an activation. So let's round up and say it's about $300 for a 150K account, which is absolutely insane. I mean, that's very, very, very cheap. The barrier for entry is very low. Most people can afford $300. If you can't, well, I hate to say it, but you probably shouldn't be trading. You should go get a job. That's just the cold-hearted reality. So, and then the last thing would be 5-day payout. So every 5 days, you're eligible for a payout as long as each day is $200, and you're allowed to have a 50% split. But the key takeaway is, let's say if you make $2,000 profit over the course of 5 days, and each of them is $200, and plus a little bit more to make up to the $2,000, and you withdraw 50%, now your max loss limit is now $1,000. So that gets you that way a little bit. It's a little bit tricky. It kind of forces you to make more money to then be able to withdraw, which is what screws up a lot of people. My honest opinion, and if I could go back to square one and see all these prop firms in front of my eyes, I would still go with FTMO and the CFD firms, just because as a new trader, it's easier to pass them, it's easier to keep your account, and overall, it's just a better trading experience. But as I grew as a trader and built some capital, I would migrate to futures firms. And for personal capital, in my personal opinion, I think it would be best to trade with futures because there's no slippage or very little, and there's next to no spread, and just the trading conditions overall are very better. So that's my personal take. I hope this video helped you, and yep,